In Placer and Sacramento counties alone, the number of mortgage refinances has surpassed 100,000 just in the past year. This is about, get this, 1 in every 4 homes. So, what's driving this refinance frenzy? Brandon Haefele is the president and CEO of Catalyst Mortgage in Roseville, here to break down these numbers for us and what it means to the red-hot real estate market, and even more so, Brandon, money in our pockets. Good morning. Thanks for being with us.
Good morning, May. Thanks for having me.
Okay, so let's start with the reasons to refinance right now. Savings. A lot of people are making money off of refinances, some of them some big time money. So how do you know it's worth it?
Well, really right now, we again go back to what we've talked in the past. We're at a point that you actually have record equity in your home with record low rates. And last year, let's say the average person, the average household made about $73,000 a year in income. They actually gained roughly $70,000 in equity.
Wow.
So if you're in that position where maybe you have some credit card debt, home improvements, now you're able to refinance, pull that equity, and really save, in some cases, tens of thousands per year in interest.
I like the numbers coming back to my pocket. I want to talk about terms here. Could be another reason to refinance. A lot of people with these 30-year mortgages, we're seeing some people refinance and lowering those terms. When do you know you should do that? And I'm thinking more, should I refinance for, say, get off of a fixed loan, go to an ARM? I mean, I tend to like adjustable rate mortgages because that means that I'm spending less on my mortgage per month and maybe spend more per month.
Right. It really depends on case by case. We always say that loans are customized to you because really your situation might be different if you're going to leave in 5 years and maybe move, to a different house. But if you're going to be there long term, a 30-year fixed really is one of the best ways to go. But it's important to remember, even if you refinance, let's say 2 years ago, you actually can refinance to a 28-year term, so you don't have to reset that loan. And you can also, in some cases, still drop the interest and maybe drop the payment.
You had touched on this a little bit earlier. It's a big show me the money, right? A lot of people refinance to pull out that equity. You mentioned that how high it is right now. A lot of people getting a lot of equity in their homes as the home values start to raise more and more. So the holidays are coming up. When do you know it's a good idea, good criteria to go ahead and refinance and pull some of that money out? Could it be for holidays, maybe a gift for myself, my kids? What could it be?
Well, really, at the end of the day, I would say stick with things that are credit cards, debt consolidation, maybe if you have to do student loans, home improvements, but really stick away from the other stuff because at the end of the day, the equity is something you're going to have in the future, and that really you might depend on that someday for retirement. So be strategic, be smart about what you're doing, and look at how you're going to improve your financial position. But it's important to know that we had 105,000 people refinance this last year. It's estimated there's about 75,000 people still in our region that can benefit from refinancing and improving their financial position. So as you're going into this next year, really take some time and look at that and see how it can benefit you.
Okay, Brandon Haefele, President and CEO of Catalyst Mortgage, keeping us responsible, making us look at our financial perspective and making sure that we get the most money out of our homes and these refinances. It's always good to talk to you, Brandon, our local mortgage broker, and we know that you're looking out for us and have our special needs here in Northern California matched. Thank you so much for your time this morning. I appreciate you.